I'll give a call to Ann.
So that's one thing I don't like.
I say, well, obviously, something has changed. He goes, whatever you do.
All right, so what I'm going to do right now is walk through some of the problems that you may see on the final exam, some sample problems that you'll see there. I've got 4 problems up here from different chapters that we'll work on. They kind of, some of them aren't real difficult. So when on the final exam, I didn't put some major big problems on there. I did more smaller problems, because there's going to be quite a few of those that are which is 20 of them. But there are some of multiple choice too. And so we'll walk through some of these here. One of the problems that we had in chapter 14 is similar to some of the ones you've been doing. So I kind of already walked through chapter 14, that's my time here. And then I kind of just chose a sample of those. So this question is on page 349, way back. So you got to turn your book back.
What, 349?
Yeah, 349. This is 7-12 EX, 7-12. So I'll give you guys a moment. This is going back to that time when we're over and short in cash. I don't know if you guys remember way back. I guess it's only been about 3 weeks, but it seems like a lot longer ago. When you were short and over. I'll give you guys a few moments to kind of walk through that. $348 actually.
And EX 712.
Yeah, 712. And a good example for this one is on page 327. You'll see at the top of the page there, what we're looking for is a journal entry that basically fixes the issue. We say sales is one thing, but we have cash as another. Anybody that's done run a drawer probably has had this happen before. It's either short or over, right? And so that's what we're just going to fix here. So I'm sure probably most of us have at some point in our time run some of those cash registers and found it that way, or managed people that have that issue. So that's what we're going to take a look at this one. So I'll give you guys a moment to kind of figure that out. Again, the example there, 327, pretty outlines it pretty well, the journal entry that you'll have. You'll have cash over, short or over, and then you'll have sales. I usually put it in parentheses, but you don't have to. This will be the journal entry that we'll have here. So what are we receiving in cash? 114,850. And what do we have in sales? 975. So we have a difference there. This side is bigger. So now that means we are short. We need some additional cash. So we have how much? 125? 125. And that will go here. So basically when you're doing this problem, when you're taking a look at this problem, when you're working on the exam there, you will need to basically figure out what the cash is, what our sales are, you'll know if you're short or over. Pretty simple. Then put it in there where it goes. Make sure it balances, right? Debits and credits always balance. All right, so you should get that one right on the exam? Yes. All right. Check. Good. Everybody got that one right. All right, so take a look at the next one here. It's 9-6. I'll figure out what that page is. That is on page 438. So I'll give you the correct page this time. Instead of looking at the other side.
Let's just make them all like this problem. I like this problem.
Really?
So you might agree with me.
I am totally down with that.
Really?
It's not a complete final exam.
That'd be the whole final exam.
Oh, it's 9-6. Yeah, okay. I thought I could get it.
Not the new one, the one we just did.
Just this one?
Yeah.
Yeah.
It's similar.
This will be
You
pretty
can stay
nice.
away from the ones that have like 40 different
I know.
answers.
Yeah, because you know what the
Three
thing is with
subsections
those?
and then.
Is it's like, oh, because here's the problem. Once I mess one thing up, then the rest of it all gets messed up. I mean, why mistake getting mixed up with
On the
things?
homework, I looked at the great big ones and just got, I'm skipping this.
Okay.
We're out there for one thing and check.
So in EX 9-6, we have 3 transactions that have happened here. So on March 28th, we replaced the transmission at a cost of think we actually even did this as a practice problem.
We did.
If you guys remember.
We did.
So we'll work through it again, one more time. So you really, really should get this problem right on the test, right? Since you worked through it in class once, did it for homework, probably similar, and now you're doing it again. I'm hoping nobody missed that. I'll check and see if anybody missed them when I'm going to talk. Okay, so on March 20th,
We'll be talking.
so we have accumulated depreciation on the truck. That's what we're going to take this to. So we have 1890. All right. And then what do we pay out to do this?
Cash.
Cash. Now remember why we put this to accumulated depreciation? So we're adding it back, so we're taking it away from our accumulated depreciation. Because now we're not that's something we've added to the truck, so it's not depreciated as much. So what has happened here is we've put that back into it. So we've added value to that truck by putting a new transmission to it. Hopefully it's not up that much. All right, so next question says here, on June 11th, paid $13.50 for installation of a hydraulic lift. So, June 11th. We have cash, right? And then what else do we have? Yeah, delivery truck. Shouldn't miss any of this, right? And then cash. I have to toughen this test up. I'm gonna have to toughen the test up. I'm wondering.
I know.
For some reason, I went over this already.
I like it already. I know I got two.
I randomly pick these problems. All right, so on November 30th, our last thing that we have here, we paid $55 to change the oil and air filter. Remember what that was for?
Repair expense.
Yeah, repair expense. Or we can also call it maintenance expense, too, whatever. And so that's cash. Repeat the cash for that. So, repair expense, because remember expenses are debited. And the little cash we're taking away, $55. So we're reducing our cash account. All right, how are we doing? That's easy stuff, huh? I should have randomly taken those questions. All right, so 11-9. This is on page 526. I'll give you guys a moment to take a look at this one here. Trying to figure it out. Did you work on this one also?
No.
Similar
No,
one
we did
though.
11.
11-8, okay. There was a similar, I remember a similar one to this one. But I tried to put stuff that you guys are familiar with. that we've done before. Wasn't trying to trick you guys. Okay, so we have 3 dates there. So we have a declaration, the declaration date, the record date, and payment date in connection with the $187,500. So what we have here is, remember what happens on the declaration date? What happens there? Remember the date of that.
Levy receiving cash.
So on a declaration date, we have now accrued a liability, right? Because now we made a promise, when we declared it, that we were going to pay this amount of money to our stockholders at that point. So what we're gonna do is we have to then put that in there as a liability. So what we have is a liability to pay them. So as a liability, we have cash, dividends, payable. And that was 187.5, right? Okay. Now, what we're gonna debit is now we're gonna take away from our retained earnings or net income. Basically, we're taking away that stuff that we have there. And what we're gonna do is we're gonna credit, debit cash, dividends. For 187,500. So now we made the commitment there to pay them, right here. This is our liability. We made the promise here that we will pay them that amount of money. What was this, July 10th? Yeah. Okay. So what was the next date on there? August 9th. Okay, so on August 9th, this is the date of record. And what's the date of record for? Yeah, recording it. So whoever owns the stock on that day is going to get paid. Does it matter to us as the company? No, it doesn't matter at all. So we're not going to have it. So there's no entry here. There's nothing we have to do there because it's whoever owns it, we're going to pay those people. All right, and then what's the next last date? September 18th? Okay, so now what we're going to do is actually have to pay this liability. So what do we have to do then? So what are we going to debit? What are we going to debit first? We have ideas? We made a commitment to pay. So when we pay that commitment,
The payable.
yeah, so that'll be our debit. So we'll have cash, dividend, payable. And what do we use to pay that? Cash. Perfect. And those are your transactions. Another easy one.
So these are more longer ones on these, Dan?
What's that? These are a little long. They're supposed to be a little longer. I may have to go get more in there.
Thank you.
Well, you can't change it, so you.
Yeah, you're right. I guess so. Ah.
Well, we should
Yeah, we
definitely
want
have
to
this
pass
on
this
by Friday.
test, not
Yeah.
pull our hair out. Meanwhile. No, that ball. Oh, I'm working on it already.
Working on it already. That's good.
All right.
Oh, I'm so excited.
I'm not supposed to do that.
Oh.
Sorry. I'll keep here and we'll just talk. All right, let's go to the last problem here. So it's EX 12-6. That is on page 570. I'll give you guys a moment to take a look at this problem. This will take us a little bit of time. This one's a little longer. Thank goodness it's something there. Everybody get this one? Yeah? You erase it?
What? Too crazy. Recording?
Yeah, I wonder if I did forget to record. Oh, no, I think I'm recording. Yeah, it's running. Hi. Did you see that? I'm gonna have to try to delete that out there.
Redo.
Want me to do it all over again? No, it's not too bad.
It only took you 2 seconds.
I know, it didn't take very long, did it? All right, so read through that problem on 570 there, EX 12-6. So I'll kind of read through part of it here, and we'll kind of walk through this. So on the first day of the fiscal year, Woodard Company issued a $12 million of a 10-year, 8% bond to finance its operations, producing and selling home improvement products. Interest is payable semi-annually, so remember that portion there, twice a year, semi-annually. So that's one thing you're gonna make sure you look at when you're on the test, is if it says semi-annually or annually. The bonds were issued at a market interest rate of 10%, resulting in the company receiving cash of only $10,500,000. some change. So as a part of that, that means we have some discounts there, right? We give them a discount because they're getting, and so what we'll do is make some of those adjustments there. Now remember, because we gave them the discount because in the market, they can really get 10%, right? So why would you get an 8% bond then? Well, if you give me a discount on it, then that's why I would do that. So that's the reason why they gave them that there. Otherwise, nobody would get their bond because I can get a lot better interest than somebody else. So that's the reason. So what we're going to do here is walk through all of these. So we're going to journalize the following entries. Issuance of the bond. All right. So what do we do? What happens when we issue the bond?
Receive cash.
All right. Receive cash. So we have cash first here. How much cash we receive? 541. Is that right? All right. And the bonds payable was supposed to be 12 million, right? That's what we're going to pay. It's going to pay. Now we have a discount. And remember, this needs to balance, so that's what we're going to do here, is I need to figure out what this is here. So, we're going to help me out.
Four, 5, 9.
4 or 5 minutes? Yeah, that's what it looks like. Did I do that right? All right. All right, so that's the first one. That's our first problem. So that's number one. So number two, what does it ask us to do? So number two, it then says, first semi-annual interest payment. Amortization of discount is to be recorded annually. Ah, okay. So that means we're going to have that annually done. So we're not going to worry about it on this one here. Okay? What's that?
So no entry.
What's that? No, we're going to still do the payment of the interest. So what's our interest when we have to pay? So obviously we're going to credit cash because we're going to get rid of that. And then what account is it going to come out? What are we going to debit as an account?
Just give them a consideration. Or no, not that. Interest expense.
Interest expense, perfect. So interest expense. So we're going to have an interest expense there, and then we have cash, so we're taking it out of that for that transaction. So with this one here, in the interest expense, we've got to figure out how much the interest expense is going to be. But what do I have to figure it out to be? You guys remember how we did that? Chapter 12. So what we did, remember, is we're paying interest. How much interest are we paying? 8%. But that's over the whole year, right? So we're going to divide that by 2 because we're doing each of these by that, so it's 4%, right? And so we can do that 4% times that 12 million. And that would give us what it's supposed to be. Or what you could do is 8% of 12 million, divide that by 2. 480,000, perfect. Sounds right. All right. Everybody good there? How we got that?
Yep.
All right. So number 3, no, we got to do a second semi-annual interest payments. Well, that's pretty simple. It's the same one. Same thing we're going to do here. I'm going to shorten the expense here. Try to squeeze all this in here. So 480. So again, basically the same thing. Now, lastly, is probably what we'll have to do is our amortization of the discount at the end of the year using the straight line method. All right. So we have to start taking away from that discounted bonds payable. We have a debit balance, so what we're going to do is going to credit it here. Okay? So what we're going to have here, actually I'm going to put it way up here. Is that okay? Hope they can see on that. That's good. All right. So we're going to do a discount on bonds payable. That's going to be our credit, right? Because we're going to take away from that. Now, we also have something else that we have to put in there. What are we going to debit? Anybody have any thoughts?
Oh, it'd be cash, wouldn't it? 'Cause you're paying them.
Well, it wouldn't be cash, because if we did cash, we'd be adding to cash. We have an expense, basically, is what we have.
On the
Yeah, so we,
bonds payable?
was that? Yeah.
Oh, sorry, I guess.
So we would have interest expense again. So that's what we would have here. So we're increasing our interest expense. Now, how do I figure this out?
How come when you explain it, it just sounds so practical, and then when you read it in the book, it's like a logical, you didn't see what else happens, I'm like, oh, yeah, duh.
Because they're a lot smarter in the book than me, and I'm just a regular guy, and I guess I don't know.
It's so much more clear, it's like logical.
All right, so we're going to have to have additional interest expense as a part of that. All right, and that's what we'll be able to use and deduct from our income statements, right, as a part of that there, that difference. So now what we have, we got to figure out what that value is going to be. So we know that this is what it is here. That's what it is over the lifetime below, right? So how many years do we have for? 10. Divided by 10. And so that should be 149,546. I'm rounding up. That should be 90 cents, right? And I'm gonna put this up here too. All right. So we're gonna make sense how I got that? So I'm just basically amortizing that over the 10 years. That's what it told us to do. All right, so that's section A. Questions on how we figure that out? All right, so let's go to the B part of the problem. I'm going to erase this in a moment, so if you're going to take any pictures or write any of that down, go ahead and do that. Give you a moment to do that. Well, it says now determine the amount of bond interest expense for the first year. Well, that should be pretty easy to do, right? Basically, I'm going to take all Prince's interest expense. Just add it all together. So this one here, and this one here. If you add all those together, that gives us our B. So our B will be 149,526, 480, and 480. That will give us that value there. So questions on that one? Everybody got how we got that? Pretty simple. We already did it already. We just now just got to rule it out. It's pretty simple there. So the last part of the problem, C, it says explain why the company was able to issue the bonds for only $10,504,541 rather than the face amount of $12 million. Again, we had to do that. So I kind of explained that before when we first started this problem. We had to do that at a discount, otherwise nobody would purchase it. Because then I said put out the same amount. Why would you purchase an 8% bond? Bond when I can get 10%. So you got to discount it so that it makes it worthwhile for me. And so that's the reason why. So it's a lot less. And so that's how you would explain that basically there. So we'll write that down, something like that. All right, maybe I'll choose one more problem. We still have some time. I want to show you guys. chapter 8 begins. All right. So let's take a look at exercise 8-3, chapter 8, 8-3. I'll give you guys a moment to read that. This is on page 387. I do this one too.
No.
Good. You're saying that I feel better.
No, I have all those circles over here.
Oh, okay, good. All right, I'm gonna go erase this here. Give you guys a moment to kind of start walking through this problem. So again, this is EX 8-3. So what we have to do here is that direct write-off method we did before in chapter 8. So we have medical equipment company, we have to basically direct write-off accounts for uncollectible receivable. Remember, so we sold something to this person. And that's what we're going to start off with, and then we may have to write off some things because this person's unable to pay us. So let's first journalize the first transaction here. It says on January 30th, sold merchandise on account to Dr. Cindy Mott for $85,000. The cost of the merchandise sold was $50,000. So going back, way back, when we first started this class, probably about chapter 3, we would journalize the transaction, right? And we'd have to do the cost of the merchandise sold, and then we also have to do the sale transaction, right? And so that's what we're going to do here. So how do we sell this to her? On account. So it's going to be, I'm going to put accounts receivable. And I'm going to put Mott. That was $85,000. And then we have sales. That's what we're going to credit for $85,000. That was our sales. Pretty good there. How we got that? Not too bad. Now, what's the next transaction that we can do? Anybody have any ideas?
Cost of merchandise.
Cost of merchandise sold. Good. And that was 50,000. So that's 50,000 there. And then where am I crediting? You guys remember from? I don't remember. I guess it was shipping 5. Was that merchandise inventory? Yeah, that sounds good to me. That's perfect. Merchandise inventory. That's 50,000. All right, so the next one, on June 3rd, it says we received $48,000 from Cindy and wrote off the remainder owed on the sale of the January 30th. Was that collected? All right, so on June 3rd, I have a transaction here. What did I get in? I received some things. I received some cash. And how much was that cash that I received? 48,000. Okay, so we have 48,000 there. She really owed us this. We're going to have to put our accounts receivable. That's going to be our credits. For Mott. And so we have 85,000 she was supposed to pay us. Now, we're writing that off. What would that go into? This is just a direct write-off. What's that? Bad debt expense. That sounds great. So that's what we put it to. Is bad debt expense. So we have bad debt expense, and so we have basically we have to make this balance. So 85 minus this gives us that expense. Is that 37,000 it is? That's what my base has to. There we go. All right. How are we doing so far? Too bad? So the next part of the problem, it says, all right. Whoa, we reinstate the account. Oops. Yeah, reinstate the account for Dr. Mott. She has been written off on June 3rd. She was going to receive full payments in $37,000. That was nice. So first thing we have to do is reinstate that account. So how do we reinstate that account? Accounts receivable again. So what we're going to do here is, what date was that?
November 27th.
No, let's do it. November 27th. All right. So we're going to put accounts receivable. Not $37,000. Now, what am I going to credit? There's something that we debited already that we need to now remove because of that.
The bad debt.
Exactly, the bad debt expense. So we need to remove that because she's actually paid us. So we're reinstating this right now. We're getting this back together here because she owes us $37,000. We know that because she only paid 48 of it. So she owes us $37,000 of that. So we're reinstating that, and she owes us $37,000, and we got rid of the bad debt expense. We pulled that out by crediting that, so we subtracted it out so like it wasn't there anymore. Good? All right, then the last transaction is the same date. I'm going to put it in mine here, so it's November 27th. Well, we received what? What do we get for that? We got cash in, and so what are we going to credit then? Accounts receivable mod. Okay, so and we know what the amount is. It's 37,000. We have 37,000. All right. I've gone through 5 of the problems.
How many questions are there on the final?
21.
21?
Yeah, there's 21 questions there. There are seven of these type of problems. And I've gone through 5. And really probably closer to 6. And then you have multiple choice. There are about 14 of those. So there's actually a bonus question. There's a bonus question.
Okay.
So that's why it's 21, because it's really out of 20, because they're 10 points each. There's a bonus question there. So there's a little cushion out
The multiple choice, there's still equations.
there. There could be, there's some that are answer the question, or there's some that are, well, you'll figure things out too, like that. So similar to those. So. All right, so questions? No? You guys feel pretty good? Is that?
At the moment.
Well, good. At least you feel good for home. What's that? Be prepared for that. I think, I'll have to look at the time. I think I gave you 2 hours on it. So, yeah, let me double check it, but I think I gave you 2 hours on the exam.
2 hours, or it shouldn't be too hard, it's only 2 hours. Last one was like 3 or something.
Did I give you 3 last time?
Was it?
Yeah,
You're
like,
kidding.
I didn't have a time.
Oh, I did, yeah.
It's unlimited.
Unlimited, it's wonderful. And by Wednesday, that's
Can't change it now.
Yeah, I did.
Awesome.
All right, let me know if there's anything else that you guys need. I appreciate you guys, this class.
Yeah.
And let me know if there's anything I can help you guys out.
was good.
So, you guys take care of yourselves. Wish you guys the best, and let me know if there's anything I can help you with. Enjoy your week off.
You get a week off? Oh my gosh.
Well, not full. Maybe.
That's how I go.